Fools, tax time is upon us, and you really need to be careful because there are so many tax breaks out there that so many people don't even know about. Often, taxpayers end up missing them and missing out on thousands in tax savings. My name is Dan Caplinger. I'm the Motley Fool's Director of Investment Planning. Today I want to talk about 3 of the most commonly overlooked tax breaks that you can get to help reduce your tax bill. And the first one I want to talk about, they're all credits rather than deductions. And the first one that I want to talk about is the child care tax credit. And basically what that lets you do is it lets you claim anything over between 20% and 35% of the amounts that you pay on daycare and other child care expenses throughout the year. And you're able to take that on up to $3,000 of expenses if you have 1 child, up to $6,000 if your family has 2 or more children. And basically what you do is you take the amount and you multiply that by the appropriate credit percentage, and that's the amount of tax you're eligible to save on your return. Now the second credit I want to talk about is the American Opportunity Credit. And basically what this does is it allows, if you have someone in your family going to college, for the first 4 years of college, you're eligible for a credit of 100% of the first $2,000 you spend on that tuition, as well as 25% of the next $2,000. So the total maximum credit per person, $2,500 per year. And again, it's been expanded from past years. Used to be you can only take that the first 2 years of your college education, but now you can take it for 4 years. Now the big question there, what if you're out of college, but you're taking another class or some other kind of education? That's where the third most overlooked option, the lifetime learning credit, comes into play. Because what that credit lets you do is it gives you a chance to take 20% of your expenses, up to $10,000, and apply them for this credit. And in fact, this is one big reason why you had for-profit educational institutions like APOL Group's University of Phoenix become so popular, because you were basically getting a tax incentive to go back to school and get new skills for training and job preparation. So something that a lot of people took advantage of is definitely something you want to count towards your tax return if you actually spent money getting the education you needed to get your job advancement. So definitely these 3 things worth looking into if you have these kinds of expenses. Now for more on tax savings and paying as little tax as possible, be sure to stay tuned to Fool.com. Thanks for watching, and Fool on.